101 for today. Okay, so today the first topic is a very important topic. Okay, before we start about look for any funding solution, one of the very important thing that we need to know, of course, is to know our own business, isn't it? So today we are going to invite the first speaker, Mr. Roy Ong. He's the Chief Marketing Officer for MCM. So he's going to share with us this very important topic, know your own business. Okay, so now I'm going to pass the time to Roy. So Roy, you are ready?
Yes, I'm here.
Yes, okay, all right. So I stop share.
All right. So can you all see my screen?
Yes.
Yes, that's good. Thank you for joining our webinar online. I'm Roy Ong. I'll be presenting you the first topic of today, which is more on the big picture of a business, especially during this era of post-COVID-19. I'm sure that most of you already go through a lot during this post-COVID-19, especially those business owners. You're also facing some of you facing some challenges. Some of you see the opportunities and grab the opportunities during this period. So different businesses actually go through a different kind of a path, especially during this time. So today I would like to share more on the big picture, that you say you can see the whole overall picture, what's happening at the moment and what is a business trend, then you might have opportunity to grab the trends and actually build your own business to another new level. So that's why today the topic I title it as Know Your Own Business. Okay. So as we know that since March until now, the MCO until now is almost goes to half a year already. Time flies. We have another 1 week plus, then is officially we have go through the MCO for the half a year. Means 6 months. So throughout these 6 months, I'm sure that everyone see the big difference. Right? For example, like me myself, previously I never want to order the seafood online. But now I think it's become a common. I will actually order from the online grocery to buy whatever things I have. So this is one of the changes. So, some of our people might say that even last time when we go to the bank, if we wear the face mask on, people will feel scared. But now if let's say you don't wear the face mask, you go to the bank, people feel scared, the guard not allowing you to go in. So all these actually happenings because we actually want to embrace something new in the future. Even maybe one day the COVID-19, the virus will go away, but we'll see that a lot of the things will actually stay in the society for a very long time. So this is a topic we want to share with you. Okay, so for the market itself, I am sure that a lot of you already noticed that some of the industry actually doing very well, but some of the industry actually hit badly by the industry. So you see that the tourism industry, the leisure industry, the theme park, and some of the retail industry, they actually closed down because of the social distancing, the people not really willing to go to the crowded places. So we need to actually see which one is the area that we might have the opportunities over there. And if let's say, too bad, you are in the area that is falls under the potential losers, you might actually able to think of business transformation to transform yourself from the one end to another end, and you may actually pick up this opportunity and even do better than your previous business. So this is a basic idea of what we can do. But of course, before we just simply switch side or switch your track, you need to know what's happening in the market, right? So the next topic we like to talk is about the business trends post COVID-19, which you may expect. Okay, this I actually summarized six trends, which is out of I think easily more than 30 different trends on the internet. But this six trend I think is more directly impacted to the business owner, but at the same time, most of the people might benefit or might actually have inspired by all these trends and get benefited from it. So the first one is, of course, all of us know that work from home. So work from home, people say that is WFH, means work from home. This is a new term after the COVID-19 outbreak. So actually, in fact, that this happens for the past half a year. You will see that a lot of the giants, they encourage their people to work from the home. And like the Google, like the Facebook, like a lot of big companies, they're actually doing this. So we have to see whether from our side, our businessman point of view, do we want to adopt this kind of a practice? There's one book actually since they written 7 years ago. During that time, everyone says that 4 hours work week um, unrealistic. But you see that actually nowadays people actually tends to work from home because of uh, advantages. For example, like you actually save the traveling to the office. You actually you can work at home without going to the dense place. Like just one of our example, like I read one article is talking about the WeWork, because WeWork previously their concept, their team or their company objective is to bind the people together, so you can actually sit beside the stranger, and then you have the business idea collide with each other. So that is their selling point. But during this period, critical period, people do not want to actually go to the crowded place. Not talking about having the business exchange with the stranger sitting beside you. So it actually has a very great impact to those companies required to have a face-to-face meeting. But if let's say your business is, you can actually tap into the digitalization or maybe the online e-commerce, then that might be one of the big step you would like to consider, because it will actually move you further to the next level. And the second one is the technology is accelerating. You see that previously, before this year, 2019, a lot of people talking about the 5G. What is so big deal about the 5G is because they allow you to actually do lots of things. For example, on the online, you can control the robots to do the medical operation, because the data, the speed of the information can transfer through, and then it will actually allow the technology players to actually design a lot of different kind of things. So that's what the technology benefited from here. But actually, other than that, we will see that you notice that recently, if let's say you go to online, you'll see that some of our customer service will go online as well. So you will see a lot of chatbot serving you. There's no longer real people serving you, but you go to the website, there is one live chat there, or maybe a chatbot there, someone actually talking to you directly, because the people want to have the immediate response. They do not want to go to the bricks and mortar store just to find out, I want to check this size of the screw I want to buy from you. I can straight away find all this information online. So you see that the technology itself, even from the MCM point of view, we recently, I'm sure that some of you actually attended our SME fair. Why we have this kind of SME fair is because we believe that just with a single place online, you can actually access to the database or the demographic of the whole Malaysia in just one page. So that is one of a big, huge breakthrough. And then more and more people will get used to it, and then they will actually visit the online e-fair rather than visiting those crowded places, the expo physically. And the third one is activates the governance plans for emerging tech. So as whatever the governance practice in your company, you can actually do it digitalized using certain software. So all this can actually help you to govern it, can keep your documentation control easier. You can actually nurture the talents, you can drive the innovation, which this one later part we'll have a topic to talk about it. But talk about the ecosystem and the partnerships. You see that previously, maybe 10 years ago, the successful businessmen, they might actually do the business in a solo manner. But nowadays, it's unavoidable for you to actually work together with your business partner, or you have to actually join into the ecosystem in order to build your own business. And the ecosystem is so powerful that any single company cannot actually do it by their own. So you need to have an ecosystem to help you to build your business in different area, and also maybe have a partnership. So later part we will talk about this. also about the MCM ecosystems that will help you in this area. All right. Okay, the third one is a business leveraging more on the software. So this is more on the traditional business. Like recently, I actually ordered online the pao, the buns, Chinese bun from Klang. So previously, I know this restaurant is very famous, but I never want to order. It's because it's too far away. It's very difficult for me to park my car over there. But because of the business, they use the online e-commerce software system. You can do the ordering online, you can do the payment online, you can actually click the delivery, even select which date to deliver the buns to your house. So every business, even the traditional business, they leverage on the software. And some of the software actually is on the cloud. We call it as a cloud software. You don't even need to physically update your software or buy the CDs to install yourself. When you want to switch your computer, you don't need to transfer your information from one laptop to another laptop. So all this actually makes the software become more and more versatile and very helpful to everyone at this technology era. This one is a few examples. You see that even the Google Cloud MD of Asia Pacific says that they help the customers to actually of all sides to build the foundation of the future, because they use the technology not only to the hospitals, the government, and other businesses that directly impacted by the COVID-19. They actually use this technology to burden off their workforce, supply chains, and the IT system. Actually, not only this area, but actually there's a lot others, like for example, a payroll system, or maybe the accounting system. All these are already very common if, let's say, you use the cloud application. And the fourth is out of home and the ad spending is decreasing. This one you have to actually, you have to be very observant to what's happening. If let's say you are not really spending on the advertisement online, you just spend on the advertisement on the newspaper, you'll see that this is what's happening right now, because the advertisement people spend on advertisement actually is reducing, because people know that nowadays you need to let your data reach more people at the right timing, at the right communication methods. So the traditional way of doing the advertisement is no longer effective. But you see that the third one, the Facebook and the Google saw the better and than anticipated the first quarter revenues, because of they can actually reach more people at the right time, and they can have an immediate response to that customer. For example, if today you see a signboard, you are interested in that kind of a product because you are driving, you can't stop and actually save the phone number, right? But in online, you can actually do this. So those advertisement, those platform that can help you to build your business, you can actually fully utilize this. If let's say previously you don't do so, you can think about it. Actually, in fact, it's not really difficult if let's say you know how to do it. Just now we mentioned about the online service provider that can help you set up your online store. You can actually even put your products on our SME fair, which we are actually ongoing. We'll have upcoming SME fair and other fairs as well. You can fully utilize this kind of events to help you to build up your own business. All right. So the fifth one is the supply chain, which will be shorter, because people want to get the access to the product and services in the shorter time. I still remember the few years ago when I go to the Japan, they're already talking about just in time. When they order morning, afternoon, they can receive the product. But in Malaysia, we are still growing. We are still going towards that kind of a direction. But always bear in mind, if let's say you want to shorten the supply chain, then the fulfillment center will be quite compact. For example, in Malaysia, means that in Selangor, you need to have 5 to 10 different fulfillment centers. So that's one of area that we might want to have infrastructure expansion. So if you are on the distribution service, you might actually think of that trend. Okay, and okay, this is news from the Age Markets, says that the supply chain disruption, in it there is 4 different challenges that you might face. The first one is the closure of a retail stores. Previously, you might have a distribution channel through the retail store, but now you no longer have this as your as your partner and reduce average capacity. I'm sorry, I have another 5 minutes to go through all this. Okay, I go through those important point is reduce the average capacity. So in other words, you need to actually set up more fulfillment center. And you see that the last one, shift in the e-commerce fulfillment and production shifting offshore. So this is also to allow you to access to the clients at a faster phase. Okay, the last one is the entrepreneurship, which will be accelerated because of the post-COVID-19. This is a trend we see it significantly happens at the moment. You notice that more and more people will start doing the business online, or maybe do a business to solve certain problem. It's because of because due to some of the people, they are working, they actually get retrenched, and then they are jobless, and they think of starting their own business. Like for example, in my own residential area, there's a lot of people starting to work from home doing their own small business, like baking their cakes and then sell to their neighbors. So all this actually will be happening. But today I would like to talk about one thing is the entrepreneurship from the different area, and then what you can actually get from the initiative from the government. If let's say today you are the startup, you can actually go to the Magic website and get all this information. And because they allocate a very huge amount of the funds for the entrepreneurs, because 2 days ago I just attending the launching of the GAP, virtual GAP, the Global Accelerator Program. It says that actually now more and more people are starting up their business, and not to be surprised that actually the entrepreneurs for this year is amongst the highest for the throughout the whole previous year for those who started their business during their university time. Because university time, you have a lot of ideas. Some people will wait until they have a resources, then only they start their business. But nowadays, the university students, they will start their business because there are so many supports from the government, like the Magic, one of the largest support organization for the startups. They have the sandbox to help the entrepreneurs. They have the grant to help the entrepreneurs. They even have a mentorship program to help the entrepreneurs. So a lot of our university students already start up their business. If let's say you are thinking of a startup, your own business, maybe you can access to the resources from Magic. And we are proud to say that MCM, you see this logo, MCM, during the launching, the announcement announced that the GAP Global Accelerators Program investment partners, MCM is one of them amongst all the prestigious brand in the market. All right. So I give some examples of a business transformation in a very quick manner. We have partnered with a few companies. We have encountered some of the companies and work with them, and we know some of the business in the market. This is one of the good example. Previously, they are doing the spa, but because MCO during the lockdown, because the spa business have to stop, but they actually transform their business very quickly to the manufacturing of the sanitizers, and then they distribute the sanitizers. And at the moment, during this period, critical period, they have the chance to transform their business from the spa business to the wellness business. And they just recently opened up the Danai Wellness boutique in Penang. So this is one of the examples of how you can transform your business from one business model to another business model. And another very good example is Jingming Li Cai, the Money Compass. They are the magazine, reputable financial magazine in Malaysia. They have English version and a Mandarin version. And they actually also have transformation under their group, the Money Compass group. They have set up, one is a You Learn Money, which is an online financial literacy platform, because they see the gap between the needs of the acquiring the financial literacy. So they set up this to bridge it to the young people. And secondly is SME Fair, which you are familiar with, because I'm sure that you already attended our SME Fest. So this virtual fair is created for the SME, because in the future, more and more SME will actually go towards this direction. And then we see that this is a tremendous good response, because people feel that this is so easy for them to actually promote their products to the public, not only in KL, but also in the northern region, in the Johor, in Singapore as well. We have some visitors from Singapore and also Sabah Sarawak. So as long as you have products of services you want to promote to your clients, you can actually use this kind of a platform to help you to grow your business. Okay, and another very interesting business model, we call it as a Code 7, which is the world's first security ecosystem. So they basically, actually, their concept is because the traditional of managing the security team is very, very troublesome and difficult, because there's a lot of challenges for you to hire a very good security, and also to actually match the needs to the security firm. So with this security ecosystem, they see the gap between these two areas. So they actually bring all these security companies into it and provide their service providing through the apps. And also for this securities personnel, they have a training system, one of an established training system to train all these securities. So when you use the security service through this app, you can assure that the quality of the security is at the top notch. At the same time, you can actually get it on demand. Means that you call the security, they can come forward to you to give you a helping hand. Okay, so this is one of a very good business transformation as well. Okay, let me go through also the business entity. There's a few different things that before you want to talk to your partner, be it as acquiring the good partners or be it as accessing to the capital market, you need to actually understand yourself first. So first, who means that who is your partners, who is your marketing partners, who is your suppliers, who is the partners that can give you the resources, that they might actually have media, so they can give you the media coverage, or who is your clients, and these clients, how you access to them, is a B2B or B2C, or who is the authority involved in your industry. You need to know all this before you can start your own business. And second thing is what is a business model, like we mentioned just now, the B2B, B2C, or you have the omni-channel business model, or you have the manufacturing business model. And this business, whether it's a sunset or sunrise, so is equally important. So I will skip most of it because my time is limited, but I will focus on these 3 S, which we already mentioned this to our business partners and our members from very long time ago, 7 to 8 years ago, and we still feel that this is one of the very important 3 points that you need to consider for your own business. So if you are the owner of the business, you have to think whether your business is sustainable or not. There's a lot of homework for you to do in order to study the sustainability of your business. The second thing is even your business can be sustainable, but you need to scale it up to make it big. You have to grow your business. So the scalability is very important as well. And then the third one is socially responsible. So this is equally important because we believe that business itself is not only about making money. It's about creating the value and impact the society in a positive way. So as long as you can create the value, so the profit itself will come later, because we already solve a lot of problem in the market. Then that is the profit will not be your main issue anymore. All right. Okay. And then where you start your operation, whether this operation in this area actually is best for you, or maybe your logistic. Is it the location is right enough for you, and you want to optimize all the transportation and also the operation and the supply chain strategic planning and the business. When is your business roadmap? How is your planning? 3 years down the road, what will happen to your company? 5 years down the road, what will happen to your company? You have to paint the picture clearly before you actually walk down the path. The last one is how you will do the business. Is it the conventional way, or do you want to embrace the digitalization, or maybe do it in an innovation way? For this topic is a very huge topic. I'm sure that there's too many very good examples for us to actually share with. Of course, the last thing is the most important part of it, how you access to the capital. Always remember the cash flow is the most important part of it. If you don't have a cash flow, just forget about doing a business because your business won't grow. So the cash flow is very important for yourself. So you get this document checklist is the one who allow you to access to the right channel for the fundings, because each and every information will be very helpful for the investor or maybe the funders or the financial institution to actually evaluate your business. And the next is also the question. Definitely you have to anticipate this question before they ask you. Already have this information, get ready. For example, like what is your past project is like, because some people look at your future, what is the potential of your company, and what is the projection, P&L, the collateral, whether do you have a collateral for the investor, or do you have a timeline of a financing. All this is very, very important. Okay, I would like to actually introduce this very useful tool for you, but I will not go through here in the details because you can actually Google it. It's a very famous business model canvas. So what we just now I mentioned to you, all those points, actually you can nicely fit into this graph, and you'll see that the partners itself, a key activity you do, what is the resources you have, what is your positioning of your company, and what value you can deliver to your clients, why clients, your customer want to use your service, and how they use your service, through what kind of channels. And you have to segment, because different product you have to target different kind of customers. So all these will be equally important. Okay. And in the MCM, we always share with our members. If you want to become our members, feel free to do so. Go and contact our backend admin, and then we'll send you a link. You will sign up as our members. So inside this, our GIC, the members, the platform itself, we always share about the two things. One is a property, another one is a business. So this business, talking about those startup, what is the things they are going through, what is the challenges they are going through, what is the thing that is very important for this company to not only survive but grow and transform and grow into the next level. So all these particular things you can actually learn from our community. All right, so that's my presentation. I will pass it over back to Arthur. Thank you very much.
All right, thank you, Roy, for your sharing. Okay, so I think Roy topic is really very important. Or the most important thing, I think, especially during this COVID-19 pandemic, we really have to know our business well, or whether do we start to go maybe digital transformation on our business, or because I think just now you mentioned about the technology is accelerating. This one is really something that we can feel lah. Even though for MCM, I been organizing not less than 130 or even more webinars. And in fact, we find that it's even more effective. Like last time, one seminar, we have to go to a few states. But now, with one webinar, we can reach more participants, more audience in different area or even to different countries. And in fact, I think it's even more effective. And in fact, you can see that most of us, I believe most of you also, this is the time that you order the most thing from the online, correct or not? So I think this is something that we have to really think about. Our own business, are we following the right technology, the right trend or not? Okay, so thank you very much for Roy sharing. And I think before we go for a break, I think just now I received one question. Roy, you are here. Okay, I received one question from the audience that sent to my handphone. Just give a minute. Okay, so the question is, as a business owner, how can NCN help me in terms of funding if I need funding?
Oh, okay. actually, in the MCM, we are the ecosystem. We have one ecosystem. So for different companies or different corporates, they might need different type of funding. So I'm not sure what you are doing, what is your business like, but maybe you can actually contact us, then we can have sit down and actually have further understanding, so that we can help you on that area. Because we actually, in fact, at MCM, we have funding partners, which is legitimate funding partners who can actually help you as well. So welcome to actually contact us.
Okay, thank you, Roy. I think for the funding channel, afterward we have another topic which may help just now the friend that asked the question. So maybe you can get more information from our following topic. I see some of the audience, actually, they join in slightly late. So maybe I just briefly brief you all about today seminar. Actually, today we are going to have three topics. So the first topic is know your own business, which was just shared by our Mr. Roy. So afterward, Mr. Surin will share on the second topic, which is business investment channel. And the third topic, our Mr. Sylvester will share on the introduction to MCM and GIC, so that you can know better how we can work together in terms of all the things that we share. We are not just sharing information, but we can also provide you a solution. Okay, so we'll go for a 5 minutes break. We'll come back after the break. Okay, so please download our Biz Portal app and then purchase the face mask before it's running out of stock. Okay, so I believe most of you have come back. So we have come to our second topic of today's webinar. Okay, so this is a very important topic. It's a business funding channels. So our speaker for today is Surendran or Suren. Is a Chief Marketing Officer in Property for MCM. Okay, so Suren, I pass the time to you.
Thank you very much, Arthur. Let me share my side. All right, so happy weekend to all of us. All right, I believe today is going to be a long weekend for a few of us because we got multiple events back to back. But then I really respect a lot of our friends here willing to spend your beautiful Saturday afternoon with us to grow your business together with us. Okay, so anyway, my name is Suren. Again, I believe some of you guys maybe know me. All right, I'm with MCM for more than around 5 years already. All right. So before I go on, just now Roy was saying something. WFH. It's a new analogy we always use. WFH, work from home. But then the other day, I was texting one of my friends. Then they said our office is BAU in chat. They say BAU already. You know, when they say our office BAU already, I thought something wrong, no water or what. But then later on, you understand BAU means business as usual. Right, all these new things are coming to our life, and we are changing how we do things. And then, yeah, and then as entrepreneurs, I believe many of you guys here today are entrepreneurs and looking to how to grow your business during tough times. But then, right, you guys are very, very important, all right, because being an entrepreneur, you are the best person to make our situation better. A lot of people are losing jobs. A lot of people are having difficulties in financial. But when all these entrepreneurs come together and work together and grow your business, basically you guys are helping the whole community. All right, you guys solve problems. You guys bring more money to the economy and everything. So all of us have to work together. So like why NWA? You never work alone. We all will never work alone. Why NWA also? So let's work together and make this better. So today, that's why MCM and also Money Compass together, we have done our SME fair and all these things that actually to support the businesses to work together to make things better. All right. So before I go on, right, I would like to invite all of you guys to watch this very short video. All right, for you to understand how important is the fund. All right.
Money is fuel, and fuel is very important. I think money is there's nothing wrong with money. It's just we have to understand the purpose of money, right? So the company is the car, and money is the fuel. So I don't care how amazing your just cause is and how wonderful your culture is. If you have no money, you don't go anywhere. Like you might have bought the most beautiful car, you got no gas, you got nowhere to go. The purpose of a car is not to buy gas. The purpose of a company is not to make money. The purpose of a car is to go somewhere, and fuel helps you get there.
Right.
The purpose of a company is to accomplish something, to advance a greater cause, to contribute to society, and money will help you get there. Very necessary, very important, but it's not the reason we bought the car in the first place.
Interesting word from Simon Sinek. He's one of these very, very good motivation speaker. Also inspire many of these entrepreneurs also, talking about how important is the fund, right? No matter how great is the business, right? No matter how great is the cost, we still need the fund, right? To grow and to go bigger and to grow stronger and to do more to the community as well. All right. So the first thing that I want to share today is basically the startup financing cycle. Okay. So many companies, our business owners here also might never seen this chart before. Okay, or the cycle before. So this is basically how the funding cycle and which part of your company growth, what kind of fund normally will come in. All right. So normally when you start company, always you see there is always angels. Okay, angels means somebody want to support our cause, will fund us, or it's either the 3F, the friends, family, and normally people call fools. But then these people are seldom people that come and fund us in the early stage in the company. All right. So and then there are seed capital. So normally when the early stage of the company there is a highest risk, it's very difficult to go to institutional to raise fund. Okay, that is what they are trying to say here. And then when you look at the chart, it's the value of that means from idea to start making profit. So that is the time with the lowest, the highest risk. And then as we grow on, and you can see a lot of institutional start to come in already. The round A, round B, we have the VC coming in, we got these mergers coming in and whatnot. All right, and then IPO, when we talk about this, public market. And the public can also fund our businesses already. All right, so this is the basic, generally used startup financing cycle. All right, and then, okay, let's come to the SME fundraising ecosystem in Malaysia, okay, in our local ground. All right, and then you can see there are a few stages, right? So you can see stage 1, stage 2, stage 3, and stage 4. You guys also can see there are different parties who are willing to come in to fund our businesses. Okay, before this, right, before the crowdfunding all come in, right, basically you don't have much option when you want to fund. It's either from your own pocket or your friends and family. All right, but right now, even in the early stage 1, inception and R&D time, we have our P2P and also business angel who even can come in and also help the businesses. Okay, and then we also have a lead market where basically some company, some businesses, they can go to this private qualified market, but it's also listed, and then only we go to the public market. So when you look at this chart, right, you guys can see we have many options to raise fund. Okay, and raise fund is not only to make profit. Basically, the businesses want to grow fast, want to grow more sustainable. We need to continuously have the fuel, right? So for this fuel, right, we have all these options where they are providing us with the fund for us to continuously grow and also help the community or reaching the cost of the business, right? So today I'll be sharing. My session will be quite long, but then there will be a lot of content for you guys to absorb and also use it. I will be sharing on my own self, and then I also have a lot of videos for you guys to learn from the experts. All right, and then it will be good if you guys can have a notebook or whatever, write down and record whatever things that will be more suitable for you, and then you guys can go and do the research and then look for the source. All right. So let me go to the next one. Okay, when you want to raise funds, okay, usually there are two ways that are mostly used. It's either debt or equity fundraising. Okay, so normally as when we call debt, what is the difference between the debt and equity? So basically when we say a debt, right, it's basically a loan, right? So debt is basically a loan, but normally when you take a debt, funding, right, you don't have to sell a portion of your company. Basically, you still own the company, and you just normally will give the dividend or interest only. But then on the other side of the funding, which is the equity, you guys basically are selling a portion of your company. All right, and then usually the person who are invested in your company will enjoy the growth of your company. All right, and they are also hybrid, which is we don't want to mention here also, which is the combination of debt and equity. This is the overall, the most basic part of this funding of businesses. When you go to the bank, normally you go debt. When you go to the equity of funding or VCs, they go equity. Right, for you guys to have a better understanding or overview about what is this all about. Okay, so normally when we talk about debt and loan, this is the first thing we always think about, right? The bank, right? Whenever I need the loan, I go to the bank, right? So let's see what are the bank's facilities, right? So usually the banks are more suitable for bankable business, all right? Usually bank will not invest in a startup company, all right? Or unless you as the founder, you have a house or you have a collateral to take your personal loan and then you put in the business. That is different. But as a business, as an entity, usually banks only invest into the or fund the company who are already making profit, okay, or maybe they have collateral, right? And it's usually not suitable for startups. And bank usually they don't take risk. They try to reduce the risk as much as possible. Okay, so on these coming slides, right, about the bank, I'm going to tell you guys a little bit on what are the things usually bank wants, all right, or bank needs for them to give you the bank loan, right? So these are the little bit, okay. The source I'm getting all this in a few slides later is from mBank. Okay, so basically this is one of the example on what are the things they need. So basically they need the basic business information. All right, what is the business address, and what kind of business is this? Whether you're a sole proprietor, private limited, or partnership and whatnot. And then yes, your office or your business or your factory, is it still is owned by you or you rented by other people? And then how much is your paid up capital? How much money, own money you put into the business? How many staff you have and whatnot? And then you see these are also some information, important information. All right, so you guys can see the what do you call this? The shareholders. Okay, the shareholders also very, very important. All right, they need to know how many shareholders is in the company. All right, so this one they have to give them the informations. Yeah, why am I telling you guys all these things? Because before you go and look for the bankers, if you already have everything ready, then will be better. All right. And then this is also important. They also want to know, did you guys take loan before or not? All right. Do you guys have any other facilities already or not? And then, okay, so some of this documentation, okay, you guys can see the business registration information and everything. And then I highlight the business plan. Okay, why I highlight the business plan? Usually, right, when we go and apply a loan, right, of course, they will see your track records. The banks usually will see your track record. They see your, what do you call that, what is your achievement, how much money you're making. And they also want to know your business plan. So basically with the business plan, right, they can basically guess or decide whether your business will be continuously growing or not. Okay, if you have a business plan, it's very more likely the company can, the bank can give you the fund. All right. And then, the number 12, the management account. Okay, normally small companies, we all like, we don't have much staff, right? So normally what we do, the account can do when we do auditing, okay, every year one time when you submit the tax only, then only you do account. Okay, so this is also a mistake many of these companies do. When you have our management account updated regularly, all right, so when you want to go and get for a loan application or whatever, it will be much more easier. So for us we should have a regularly updated account, so that it's easier for us to see so that the bank can see how's the cash flow like and everything. So these things are very important, especially when we want to go for loan facilities. Okay, and then they want to see the cash flow and everything. Okay, so that's all about the bank. Okay, so just now I was talking about all this documentation that need by the banks. So when you guys have this some other things, your suppliers or your current how many customers you have. Okay, so all these things are the basic information that normally you guys need to have when you guys want to go get the bank facilities. Okay, so next one, I would like to go for this koperasi funding. Okay, so many of us also don't know, right? Koperasi also got give funding, right? So this is something we are talking about creative funding. So we have this koperasi also as one of the vehicle. So basically, so koperasi is actually governed under the Suruhanjaya Koperasi Malaysia, which is the SKM, right? And if we talk about koperasi is the general, right? They have many purpose. Okay, most of the koperasi, you guys can see, they also even serve as some benefit of community only. But then if today when you guys see the number one here, right, you guys can see even there is two banks from koperasi now even become a bank already, can give out loan and like operate like a normal bank. Right? So koperasi have a different function, and one of them actually to give out financing as well. Right? So these are the basic function of koperasi. They even give the housing loan, vehicle loan, umrah loan and everything. Okay, and what kind of criteria of koperasi you need when for you to get a business loan? So basically, this koperasi that we are giving funding for us, right? So basically, you guys can see the koperasi should be able. The koperasi must have a different license for the koperasi to collect deposit. Koperasi want to give out dividend. Like for example, this one, they must have if they want to buy and sell or transfer ownership, or they want to get a collateral and stuff like that, they also need a license, right? Not all the koperasi can do everything. So these are the few things that you need to look at. Okay, and they also can give pinjaman. This is also important. So basically, when the koperasi can give you the pinjaman, and then you can get that loan from the koperasi. Okay, so the next one, let me talk about this ECF and also P2P. ECF means the equity crowdfunding. P2P means peer-to-peer funding. Okay, so basically in Malaysia, there is 10 ECF platform and 11 P2P platform. So basically, there are different platform have a different purpose. Peer-to-peer is more for debt arrangement. Equity crowdfunding, in the name also you can see, is basically equity crowdfunding using the equity. So they have a different purpose, right? So the names I put in on the left hand side, you also can see they are all the companies at the moment have the license by the Security Commissions of Malaysia. All right. So okay, actually we have also take up a video. All right, this is a video that you guys can focus and then can understand the important notes to raise fund through the P2P and ECF. During our SME fair, we have this video. Please focus and try to get as much note as possible. All these people, 3 persons going to talk is actually the founders of this P2P or ECF platforms. Right, so put your attention to the screen.
Equity crowdfunding or ECF is just one way of fundraising. Is another fundraising channel that SMEs, or not just SMEs for that matter, any businesses, that can opt to raise money, And just to give a little bit of background for those who are not aware, equity crowdfunding was regulated in 2015. By Securities Commission of Malaysia, and the platforms here today, whether it's ECF or P2P, is regulated by we are regulated by the Securities Commission, and it was the Securities Commission was looking at regulating this way of new ways of investing for the capital markets, mainly because they realized that SMEs were getting more challenges in terms of fundraising, especially from the traditional way of fundraising. It was getting tougher. Documentation, screening, or application was getting more stringent. So the SC was looking at how can they make the capital markets more inclusive to SMEs, and also providing new ways of investing or democratizing investments to the general public, especially for retail investors. So in 2015, they actually approved 6 companies to offer this kind of service, specifically equity crowdfunding. And the following year, P2P or debt crowdfunding and peer-to-peer crowdfunding is only available for SMEs and businesses. And I think to date we have about like 21 companies offering a mix of both products and services. Now, in terms of I'll just get done with the eligibility. Yeah. So what kind of companies that are eligible are any companies that are registered in Malaysia with SSM, yeah, or the Companies Commission of Malaysia with a Sdn Berhad registration, or a limited liability partnership, LLP or PLT registration. Yeah. So these two companies, the type of structures are eligible to fundraise. That's number one. Number two, paid up capital cannot be more than 10 million ringgit. Yeah, it can't be some complex structures. And also, the maximum amount you can fundraise now is 10 million ringgit. So for each company, you can fundraise up to a maximum of 10 million. Now, for businesses who wants to fundraise, in terms of application, you must actually comply to the SC's compliance requirements. Specifically, if you're more than a year-old business, you must have your latest audit report, as well as your latest management accounts. Yeah, and for businesses who wants to raise more than 500,000 ringgit and they are less than 1 year old. And typically, less than a year-old company, they don't have an audit report done yet, right? So they must get the latest management account either certified or specially certified by an auditor, yeah? And that's important. Over and above the statutory requirements, the other more important requirements are the particular company must have a 3-year business plan with the corresponding 3-year financial projections, which includes the cash flow, balance sheet, and P&L. Yeah, so those are the key requirements. And I believe different businesses have, different platforms have different screening processes. And typically, once you get through this screening or due diligence process, then the company again looks into coming up with the content for their fundraising campaign. And then you can fundraise to the public. Yeah, so you can fundraise from anybody in the public, and that's the only way that any private companies can fundraise in public through ECF right now. Otherwise, you need to go through a public listing exercise, yeah, which is in Bursa. Okay, so that in essence is I'm just giving you in a nutshell of how eligibility of a business, the kind of process of fundraising, and also, in terms of timeline, it really depends. It can be 1 month to 3 months to 6 months. It really depends on the company themselves. And I would like to emphasize that it doesn't mean that you launch your fundraising campaign on an equity crowdfunding platform and suddenly the money just appears from nowhere. Okay, the business owners have to work very, very hard, to look at fundraising, coming out with fundraising strategy and initiatives. I'm sure Max will share also from his experience on, some of the fundraising from these companies. I just want to add one more before I hand over to the rest, is that the government is also very supportive of equity crowdfunding and to SMEs. So the government now has a program whereby they co-invest with the public. It's called My Co-Investment Fund program, whereby for every 4 ringgit the public invests, the government will match automatically with 1 ringgit. Yeah, and there is a special, and the program has now been made more interesting because due to the COVID-19 situation, the government realized it's getting tougher for fundraising. So they've made the matching more aggressive. Now, from April 3rd till 30th of September, the matching is now for every 2 ringgit, the government matches up to, the government matches 1 ringgit automatically up to 1 million ringgit per company. It used to be 500,000, now it's up to 1 million. but it's only available up to 30th of September.
Okay, I'll be first. Good afternoon. Thanks for having me. I mean, just to be very general, is that P2P and ECF is actually very, yes, we're both crowdfunding platforms, but we're actually very different. ECF, you raise funds for equity of the company, you raise funds by giving away from some shares, but P2P is actually very straightforward. It's similar to a loan, right? So for example, SMEs who wants financing, who wants to raise funds through debt, who instead of going to the bank, they can actually go to a P2P platform to raise funds for debt, so like a loan. So for the investors per se, instead of investing in the equity of the company, you're just investing in the debt of the company, or you're so-called just lending your money to the businesses or SMEs. And of course, because of that, the P2P structure is normally shorter term. The investors, the issuers, the SMEs. So they every month or every specific period, they will need to pay back the money back to the investors with interest or profit. So for the investors investing in P2P, the returns they get is actually the interest or profit that they from their principal investment. So that's basically difference between ECF and P2P. Just running some numbers for the P2P industry in Malaysia, because we are about over 3 years old now. The license was first given up in November 2016. It was announced to 6 different P2P players. Fantastic is one of them. So it's over 3 years old now. Fantastic went live in July 2017. The industry have actually, as of June 2020, I've done about almost 800 million ringgit, and we served a total of about 2,231 different SMEs in Malaysia. Fantastic actually take about 50% market share in terms of the unique SMEs. So out of the 2,231 SMEs, we've got about 1,100 plus unique SMEs in our platform that raise funds from our platform. So basically, that's the difference between ECF and P2P. Then because of that, just to explain more about how P2P work. Of course, for Fantastic, we're a fully online digital platform. We target, of course, the small and micro SMEs, the underserved SMEs that are unable to get financing from traditional FIs like the banks. So, of course, majority will be the smaller SMEs, right? The one that are looking for 20,000, 30,000, 50,000, 100,000 kind of loan, short term. It can be 12 months, 6 months, 2 years, 3 years. So that's our target segment. And because this actually holds about 80-90% of the SME market in Malaysia, so the volume is there. So we need to actually make sure that the P2P platform is able to accept this many SMEs and also at the same time investors onto our platform. So we are a fully digital platform online with more on the webs, on desktop and also mobile app, where issuers can actually, or SMEs can actually just register online, upload their documents online, apply online, sign their contract online, and then receive the disbursements of the money to their business bank account within from end to end as fast as 5 working days. Yeah. So it's basically an opportunity for SMEs, or an alternative opportunity for SMEs to get financing from P2P or raising funds through equity in ECF. Okay, SE also capped our interest rate maximum 18% per annum, but I don't think any of the platforms has actually reached 18%. Like for us, it's 13, average is about 13 to 15%, the highest for each platform. In terms of speed, definitely we are definitely quicker than the traditional FIs. Like I mentioned, our time to money from registration to receiving the money in pocket or bank account can be as fast as 5 working days, whereas I don't think many banks can actually do that at the moment. Documentation as well, so everything is online, right? So for example now, because we have partners with banks as well, so I do speak to them during the MCO with the SRF funds coming in from the Bank Negara, but banks can't actually go and onboard new customers because banks have their policies or regulations to go do site visits and stuff, but they can't actually go out, right? So for P2P being a digital platform, from the comforts of your own home or office, they can actually just apply, register, upload their own documents. Even our due diligence and KYCs are all mostly digital as well. So that's one of the benefits. But I think above all is actually the SMEs that are currently underserved by the banks. Either they're too small or too young, because some banks still ask for two years or 3 years financial track records, right? Whereas for us, Fantastic, we don't even really look into financials, right? We look more into the credit behavior of the business and the business owners. So that's the difference. So new businesses, small micro SMEs who are looking for just it can be very as little as 20, 30,000 compared to like maybe, I mean, there's P2P platforms do also do up to 1,500,000. We do up to 200,000. But if let's say you just did a short term just to roll your money to write the type during the RMC or MCO 50,000. So then 20,000, 50,000 is not really much of the bank's appetite at this moment. So then that's where they can come into P2P.
Okay, I think depending on the platform, actually for equity crowdfunding, in general, there's no discrimination in terms of industry sectors, okay? But some crowdfunding platforms tend to be a bit more skewed towards tech type of businesses, yeah? But specific to us, Ataplus, we are open, we are industry agnostic. I believe CrowdPlus is the same, yeah, industry agnostic. So, but at the end of the day, as a business, whether the company goes for equity crowdfunding or P2P or even conventional way, whether it's invoice financing, factoring, or trade finance, it really depends on the fundraising strategy of the company, you know, the financing strategy of the business, you know. So, like for us, if the company comes to us and say, oh, we want to fund a project, but then we'll tell them like, look, you know, for equity crowdfunding, you are giving out equity of the company. So typically for companies who are looking at expansion or growth funding, then perhaps equity crowdfunding is more suitable. But for project financing, for invoice financing, you know, it's probably going, or more short-term like of financing, like bridging. So P2P may be more suitable, or other types of funding products out there, you know. So that's typically what we will share with them. And the other thing is they have to understand that with equity crowdfunding, it's not just about the investment value proposition. Sometimes investors also look into the viability of the business, how attractive is the business, the market potential, and the potential upside, you know, for the business. And sometimes also even who runs the company, the management team. So the key success factors or the value proposition or what excites the business or the investors can come in many ways and many forms. Max, you want to add on to what I've just said?
Yeah, Max there.
Yeah, I think from CrowdPlus point of view, we run a little bit counter to the trend that Elaine mentioned of the 75% tech and 25% non-tech. We are actually almost evenly split in terms of what we've done so far between tech and non-tech. As Elaine said, we are also agnostic. We basically look at each company on their own credibility and quality to assess the suitability for fundraising, because equally as issuers and companies and SMEs who wants to raise funds, we need to make sure that the quality of the company is right, so that when we put them out to raise funds from investors do actually get to the end of the game, so to speak, to be able to make money and earn the income that we talked about just now, whether it's in the form of dividend or interest, and also to be able to exit.
And in terms of the exit, I think that's where the additional interesting point, which I wanted to add to the income we talked about just now, of typically between 5 to 15%. On top of that interest or dividend that a company normally pays, there is also the redemption premium. So typically when an investor wait patiently, over the 3-year, 10-year or 5-year, 10-year, when they're exiting, they could do two things. They could either convert if they like the company so much after they've invested in it, see it. They have the what we call the equity kicker, so they can convert their investment into equity and become a permanent shareholder in the issuer. So if the company has been running well and growing. So for example, today, and this is where the biggest differences between P2P and ECF are, that we have a right on the company and we have equity kicker. So in 3 years' time, if you invest in a company that's making, say, 1 million ringgit profit now, and they raise the money from the crowd and then they put the money to use and grow the company, in 3 years' time, the company could be making 3 million, 5 million profit. Okay, so when the company grows, the value that the equity value of the company also grows, and so an investor who chooses to convert into shares in the company, the shares now more valuable. 5% redemption premium up to as high as we've seen 30% redemption premium. So if you take that redemption, then effectively you are like a lender as well to like a P2P, except that again the period is longer. So if you calculate that,
book may not looks good. So, and which should, what is the fastest? If I go to P2P, usually how long it will take, correct? And come to ECF, how long it will take before I get my first dollar average?
on average for us, we take about 4 months from when the first inquiry is made to the end of the process. That's average, yeah. Depends on how quickly the company can react, because we can be, I mean, in the current pandemic, there have been companies that come to us and say, we are in urgent need of money, we were doing well before COVID, now we're hit by 6 months of COVID and our results gone down. The first thing we tell them is, okay, you want it fast, we can turn it around fast for you to help you in this pandemic, but you need to be able to react fast. So we've done deals that's done in 2.5 months. It's the shortest we've ever done. It can be done, but it really needs full cooperation because our process is more like P2P, where our process is deeper because with a huge due diligence process because it's equity versus P2P. So the due diligence process do need time, and we need to comply with the SC requirement. Otherwise, if we don't do our due diligence, then we will be in trouble under the CMSA.
Okay, so that is about P2P and also the ECF. Okay, I believe these three speakers, right, from Top Plus, Ataplas, and also Fantastic, given us enough explanation on what is the benefit on using this P2P. All right, and ECF. All right, so now let's go to this Penjana. Okay, Penjana is a little bit different, right, compared to all these other funding, but basically this one is more to the government initiative to help all these SMEs to strive during the difficult times. All right, so for this, right, we have this special clip from this Mr. Lawrence Tan, the senior accountant and auditor from and director from Lawrence Tan and Co. All right, so let's put our attention to the screen and watch this video on Penjana.
Basically, their extension of all the previous plans, and they are specifically is under so-called 3 main trusts, and there are about 40 initiatives. Of course, today I won't share all the 40 initiatives because it'll be quite lengthy, but in general, there are 3 trusts. One is, of course, empowering the people. Second is prosper businesses, and thirdly is to stimulate the economy. My presentation won't go this step by step. I've chosen a few what I feel is quite important that we can share around with our viewer. Okay, so the first one, a lot of people were asking for the financial assistance. Okay, initially, when government announced the so-called under the package number 1, number 2, there's some so-called allocation. But somehow this allocation, once the government announced, within a few weeks, the fund was exhausted. That's why in this e-Penjana, government introduced additional so-called financing. This round we call it Penjana SME financing. And maximum is about 500,000 per SME. And of course, it will be some interest, about 3.5. This interest rate is still much cheaper than the commercial bank interests. Okay, so the next one is Penjana microfinancing. Again, this plan was under BSN and Tekun. Initially, before this Penjana, there's another so-called microfinancing plan by BSN that was 75,000 and 0 interest. Again, once government announced within 2 weeks, the whole fund was fully occupied. That's why this round government increase again is 50,000, but with interest of 3.5%. Again, I'll say that this is much better rate than the commercial bank or financial institution. Okay, these two are so-called direct financing, and bear in mind, this is financing and SME need to be so-called pay back all this amount. Okay, so this is the first 2 monetary assistance by the government. Okay, then the next one, we talk slightly more on this. Under the so-called technical and digitalization adoption for SMEs. Okay, actually we are currently is under, we call it Industrial Revolution 4.0, and this supposed to kick in 2 years ago, but somehow or other it was very slow take up. A lot of SME thought it's nothing to do with them, it's very far IR 4.0, but because of this pandemic, actually it expedites the whole adoption of this IR 4.0, and government is seriously want our local SMEs to upgrade their so-called digitalizations and automation. So actually under this program, in fact, there are 2 different initiatives by the government. One, we call it SME Digitalization Matching Grant. Okay, this grant is, the allocation is about 100 million. And this grant is a, so as far as I said, matching grant is a 1-to-1 grant. And in fact, the maximum of SME you can entitle to the grant is only 5,000. Now that this 5,000, actually, the process was started much earlier. And in fact, a lot of SME have been enjoying this grant. Supposedly, the grant also going to be exhausted soon, but somehow or other, through this Penjana program, government so-called extend the so-called allocations. And in fact, like for me, I also start to enjoying this type of grants. And this is a grant of which, let's say your project is 10,000 ringgit, the SME need to come out 50% of the grant, 5,000, and the other 5,000, the government through the BSN, they will so-called subsidize us. And this is different from the earlier one. That is a loan financing. This is a grant of which we no need to pay back governments. So these are 2 different things that we have to aware of. The first one is 100,000 and 50,000. that need to be paid about 3.5%. This is a totally a gift from the government to the SME to get it. And as far as this grant is concerned, it's very straightforward. As far as your company is more than 2 years and with minimum revenue of 50,000 per year, you are entitled for this grant. Okay. Another so-called condition is that it has to be a 60% Malaysian company. So these are all his government ready to give to our Malaysian. Okay. Secondly, is another grant, we call it Smart Automation Grant. Okay. The allocation is about 100 million, and now this limit is up to 100,000 per SME, and the project is up to 200,000. Again, this is a matching grant, is a 1-to-1 grant. SME, if they adopt the automation project of their companies with certain criteria is met, and the project is up to 200,000, government going to so-called subsidize the 50% of it. Again, this grant is a grant, okay, and we don't need to pay back to the government. Okay, so the whole granting, the whole process of the project is supposed to be a 3 + 1 month. The 3 months is for the project to kick off, to initiate, to commence, and the last month is the monitoring and the reports. Okay, based on the government experience, all the earliest days, those grants, they are no so-called successfully installation or adoptions. That's why now governments require, once the project is completed, installed, and before the so-called disbursements of the so-called fully grant assistance, government will want the so-called SME through their so-called the supplier to give a successfully adoptions reports, and basically this SME will enjoy this type of automation process. That's why it's a 3 + 1 months. And what the expected outcome on these grants are actually quite go align with productivity. Basically, we hope that through this grant, the SME will increase their revenue with existing costing. Okay. Second objective is to in the saving the business cost. Thirdly, reduction the process of time cycle. Fourth, reducing manpower, and lastly is to create new source of growth. So basically, to sum out this so-called expenditure actually is that to increase the productivity through the adoption actually, where we see all the things, some rather go one way or another related to the productivity, and later maybe our Tuan Haji can share a little bit on the MPC portion on this matter. Okay. Okay, that's why I say that there are some criteria on this grant. And again, this grant will allow for company, professional services, sole proprietors, and partnership. Okay, so for company, what's the requirements? Basically, it had to be a company registered under SSM, whether it's under Company Act 1965 or the new Act 2016. Minimum payout capital is 50,000. And the third one is very important, is that must be a 50 + 1 equity must be held by Malaysian. So government want to help and help targeted audience is Malaysian companies. Okay. Thirdly, basically it has a registered business activities comprising their primary, traditional or non-technology activities from all the service sectors. Okay. Then not be the subject of liquidation. Of basically, that's when this company must be ongoing company, as going concern company, is not in the process of running a company, is not bankruptcy order being served to them. Okay. And number four, I said that it's not a dormant company. It had to be a so-called some activities of the company, and it's there are no issue of going concern. Something like, let's say now we are in the middle of closing now, whatever, then you are not qualified. Okay? And of course, they must have some so-called viable projects. And these things have to be signed contracts or certain documentations that the company will be ongoing for adoption of new technologies. Okay. And the other is that if private have received any MTech grants, these applicants must show that actually all those grants have been successfully completed and used. Okay, so this is a criteria. Then secondly, this professional service sector. Actually, most of the time, the grants are covered only for the Sdn Bhd, and this is one of the few projects that actually cover beyond those Sdn Bhd. And a lot of our professional services like accounting, lawyers, architects, engineers. So this is, I think, is very special that it's open to a more so-called SME, and this one we call it SMP. Like this is a practitioner partnership, allowed to apply for this grant again. So for those professional service sectors like engineer, architect, please do look into this, this program, and do apply for that. Actually, government is very sincere to give and very serious in giving, and if the SME don't do their parts, government cannot just give the whatever grant just like that. Okay? So this is for SME. And of course, we have a new so-called type of business, we call it limited liability partnership, which established in 2012. So again, this grant also open to, we call it LLP. I think this have been never before under the MTech grants that open to LLP. So in the way that's mean that SME, government, through MTech, they want to help whatever type of businesses. Either you are Sdn Bhd, so-called sole proprietors, or those are professional services, and even to LLP. So this is, I'll say that it's very fantastic program. And this program only started last month. So I think there's still quite a lot of fund allocation still there. And please use up all these funds. Okay, I'll so-called strongly advise all the SME to seriously look into this automation grant and see how this grant can help our company to so-called to move on and to adopt the new norms.
Right. So, like just now we see, right, we even have this government bodies so actually even willing to come and also help us, right, during the difficult times, okay, especially like giving grants and whatnot. So, you see, if let's say we never do a proper accounting, we never do our business plan, we never have our records and, all the documentation done, prepared, it will be very difficult for companies to go and apply when the deal comes, especially when they open for very limited days or limited time or limited quota. A lot of company actually will miss the opportunity as well. So I want to stress again. So make sure that you guys are always ready with your accounts, do your accounts, and make sure your plan, business plan is done properly, all right, and everything, all the documentation is being done properly, and then you'll be really helped to actually to grab all these grants and opportunity given by the government as well. All right. So the next one, we have this navigating the new normal in the Asia, especially on the Pacific region and Malaysia. So we have the speaker from Mr. Rajin Dororaj from MAGIC, Malaysian Global Innovation and Creative Center. So this is just now all the earlier one we were mentioning just now is more for loan and also like equity arrangement, but this is for a startup company. Okay, if let's say you have a startup ideas or sometimes you just started a business and stuff like that. So MAGIC is actually helping all this company to grow. Okay, so they have a lot of facilities for a lot of startup company for them to grow. All right, this is more specific for startup lah. So let's watch this video from MAGIC.
I am the head of partnerships in MAGIC. Yeah, and I look into corporate partnerships, partnerships with SME and industry associations, as well as government stakeholders where we try to work with the startup ecosystem and help them, connect these components, these stakeholders into the startup ecosystem to create value. Yeah, not only for the startups, but for also the corporates and the SMEs. So typically, that's what our department does. But on a whole, Magic itself is a capacity development organization for startups and social enterprises. So when we say capacity development, we look at the very early stage startups and social enterprises to help them, crystallize their ideation, their ideas, and then put them through, certain capacity building programs like our Magic Bootcamp. We do have the GAP program, Global Accelerator Program, to name a few. So these programs basically equip the startups with the required skills, and knowledge to scale their businesses so that they can go to the next stage, say Series A, B, and C. And many of these startups that come through our doors over the last 5 years, they have done pretty well and moved into the Series A, B, C. And many have gone expanded their business overseas. So as the advent of this COVID-19 problem back in Malaysia, especially when it came, somewhere around February. So many startups, Magic did a survey, and we found out that many startups are not able to survive. If there's this MCO, this lockdown, or rather movement control order, limited movements. With this kind of, I would say, restrictions, many startups will not even be able to survive for 6 months. So that's when the government of Malaysia has actually noticed Magic's survey. Due to this COVID pandemic disruption, and decided to come up with programs, such as the Penjana program, or Penjana initiative. And under Penjana, there are various programs to help startups, I would say, survive this disruption caused by the COVID pandemic, and also, grow their business post COVID-19. So now Malaysia is still in that COVID, I would say, problem. However, we have managed to minimize it and flatten the curve to a certain extent. So, of course, the government has eased the MCO, and many are back to business. So, however, even when they are coming back to business, it is a lot of startups find it difficult to, I would say, service their existing clients or even gain future clients, because many of the clients itself has been disrupted, whether it's corporates or SMEs, or even if the startups have got a B2C solution like e-commerce or platform-based economy, many have been affected. However, when you talk about the B2C, the impact to them is, I would say, slightly lesser compared to the B2B related startups, the ones that are servicing other businesses, because B2C being consumers, now many, because, we have this, work from home and all that kind of things, right? So many are actually, going online, towards e-commerce, and, I would say subscribing to the sharing economy platforms where food will be delivered to your homes, or even products and services. So that particular angle of the startup business is kind of thriving. So it's been affected, but it is thriving more than what it was previously, because of this new norm, right? They call it, where you have the social distancing, you don't want to get into crowded places. So a lot of venture capitalists, even angel investors, are looking at e-commerce and platform-based economy businesses. But of course, this market space is quite crowded. There are a lot of them who are developing this kind of applications and solutions to go into this space. However, because of the competition not only in Malaysia, but you got regional competition and global competition. So it is because when you talk about e-commerce platform economy, you're opening up to the global market space already, right? Especially when you talk about e-commerce. So a lot of, I would say, players will come into the ring, yeah. And if those startups, do not have, deep pockets, especially when you talk about marketing, right? Marketing and outreach, customer acquisition, then that's where the startups will have a big challenge to actually scale up the business or take advantage of this. I would say post-COVID phenomenon where e-commerce and sharing economy, platform-based economy, has gained more interest. So developing the product, the platform, the e-commerce, or even getting products online is fine. But the outreach, that's where you do a lot of marketing, whether it's online marketing or offline marketing, the cost is there. And if you do not have enough funds for it, then you will have a big challenge to reaching to the consumer base, which is, very much, some of them might not have loyalty, but they look at the, especially when you talk about e-commerce, right? The last mile delivery plays a big role. Even your layout of your marketplace, the kind of products that you offered, plays a big role in it. The whole customer experience also, you see, especially when it comes to payment, and then what do you call that? Say the warranty angle of it, product replacement, all that plays a big role in it. However, when it comes about to getting the word out that you've got this fantastic e-commerce marketplace and all that, it's all about marketing and promotion, publicity and promoting it, right, to the consumer base. So the government came up with, of course, this Penjana program, Penjana initiative, for which MAGIC, and under Ministry of Science and Technology and Innovation, MAGIC, along with MTDC, Cradle, Futurize, and NIMOS, we came up with this initiative called NTIS, National Technology Innovation Sandbox. So, and this sandbox is about to be launched next Wednesday. However, there is, when you talk about NTIS, okay, the main objective is to help new technologies, right, cutting edge technologies, deep tech, to get into the sandbox and I would say commercialize, commercialization ready products to get into the sandbox and to work with regulators if you've got regulatory issues, such as if you're in drone tech, especially, and certain like fintech and all that, where you can work with regulators to help, I would say, get your product accepted by these regulators. And the NTIS main role is to help facilitate all this work between the startups and the relevant regulators. Plus, you are given a grant to do a pilot. For a single site pilot is about 250K. Doubles, 2 sites pilot in 2 locations. Maximum out of it's 500K maximum grant. Yeah, and then you got a 4 million ringgit grant and a 15 million, 4 million grant. What do you call that? Is for you to also help commercialize to the next stage also after doing a pilot MVP. So that's 4 million is that post, and then you've got a 15 million grant, especially for corporates to come in on a matching grant basis together with for the government also to match the grant with the corporate. So I would say that NTIS is a big agenda for us to get our deep tech startups, okay, to get into the sandbox, get accepted by the regulators, and improve, get accepted by government in terms of procurement, so that they can break into government procurement, especially. So where government can actually, look at that startup which is accepted, which is approved by the NTIS, and look at startups as a source of products and solutions. Yeah, when it comes to government procurement. So then there's also another grant for social enterprises called the SIM grant, Social Innovation Matching Grant, up to 10 million. The pool of grant is 10 million ringgit, but the matching grant is up to 500,000 ringgit per social enterprise, where they can apply for this particular grant, and it will be launched somewhere in September. Yeah, so these are the two initiatives when you talk about the startup and the social enterprise space, where government is playing a big role in pushing, in helping them grow. But that is basically, the short term under this Penjana initiative. But of course, in long term space, there is Magic, there is MTDC, there is Cradle and Mimos to actually help startups to grow their business. Yeah, whether in terms of capacity development or technology adoption, digital adoption, etc. Yeah, so that is what we are looking now at the post-COVID new normal for startups. Yeah, thank you.
So, all right, so that was about this Magic, right? So, we got another one, if you guys can see. This is about those companies that are already going on and they are a bit matured already. And then they are going to the public market. All right, so this one we are also want to talk about this Bursa, but what is SME should know for types of business funding. Okay, we have this Ms. Anita Othman, the Senior Vice President, Primary Market and Listing Development under Bursa. So we have a quick video on that as well. So let's put our attention to the screen to continue watching. So please, another thing before I just carry on, we got a few videos, but then please take down all the notes as much as possible so you guys can do later research to know whichever vehicle or whichever channels is more suitable for your business to continue to raise funds. Okay, so the next video.
Since the MCO started, the market has been picking up volume. Okay, you can see in the slide there on the bottom right, we are at our record high ADV, ADV being average daily trading volume. So it's at our record high. For your information, companies, when they decide where to list, they will take into account on the liquidity factors. So we are at our record high in terms of liquidity. So last week, there's a company, if you're familiar with IPO, there's a company called Optimax. They want to go for listing. The listing date is on the 18th of this month. So last week was the balloting for the IPO, and it was more than 80 times oversubscribed, which we hardly ever hear in our history of IPO in Malaysia, to have that high number of oversubscription, which means the demand for IPO is really high now. So those who are ready to go for listing, thinking about it, so this is actually a good time for you to pursue that ambition to go for listing on Bursa Malaysia. Okay, on the next slide, this is a composition of companies by industries on Bursa at the moment. Okay, just now I mentioned about the statistic that I have earlier is on the market cap. We are at 1.7 trillion at this point of time, but this statistic at 1.55 because this is at 30th June. So you can see within 1 month it has moved a lot. We hope, okay, from this statistic here, you can see technology companies is only at 3%. So I think now with the new norm, I think companies should start thinking about digitalization, going into more automation. So we hope in the future we will have more companies within the tech sector to come on board. Okay, the next slide. Okay, now I go straight into listing process. This is a summary of who are actually the approving authority for listing in Bursa Malaysia. So we have the main market, we have the ACE market and the lead market. Securities Commission or the SC basically approves all listing on the main market, be it directly via IPO or indirectly via RTO, and all foreign listing on the main market goes to the SC. Registration of prospectus as well need to be done with the SC, which is currently required for listing on the main market and the ACE market. Whereas Bursa Malaysia is the approving authority for listing on the ACE market, lead market, and all secondary offerings, for example, rights issue, bonus issue, private placement of all the board for all the 3 markets. Yeah. So for all secondary offering, they have to make an application to Bursa Malaysia. Okay. The next slide. Okay. Basically, we have 3 markets. The main market for established companies, ACE market sponsor-driven for companies with growth prospects, and the lead market, which is advisor-driven market for only sophisticated investors. I will talk a little bit more on the lead market later on. Okay, this is reasons to list, why company choose to list. Of course, there's various reasons why company choose to list, but the main factor is to raise funds, which is from listing. It's not just at the point of IPO. You can also raise funds after listing. So it's continuously, you can do that as long as you're still listed. And as a listed company, your shares is tradable. There's a market value attached to it. So with this value, you can actually use your share when you want to do an acquisition. Yeah. So in the past, as a private company, most probably you have to come up with a lot of cash to do an acquisition. But once you're listed, actually you can use your share because it's tradable. You can use that as a consideration for you to acquire, because some companies would rather go through organic growth, which may take longer, but some other companies choose acquisition route because that actually can be faster for them to expand their market share. So the next one is to retain key employees through reward scheme. When the employees are your shareholders, they can actually work harder for you, because when the company perform, it will translate into reward for them because they are also shareholder of the company. So it also enhance profiling and branding to enable the company to secure larger market, because once you're listed, you will attract more attention from media as well as analysts on the company. Okay. It also open to greater pool of investors, including strategic partners, because as a listed company, you have gone through all the process of going for listing. You have gone through the due diligence by the advisors, all the checks by authorities, be it SC or be it Bursa. So there's more confidence from your stakeholders, including strategic partners. So with this higher level of confidence, actually, you can invite more people to come on board and join you, and that hopefully will help in expanding the market for the company. It also unlock value of the company, because now performance of the company is reflected in your share price and market capitalization. Okay, the next one, this is the criteria for listing, the initial criteria for listing. For the main market, okay, you can choose to list under profit test, which means your latest profit after tax, audited profit after tax, audited PAT must be at least 6 million. And uninterrupted means you cannot have like profit loss. Uninterrupted means continuous profit for the past 5 years, and when you add up the profit of these 3 to 5 years, is at least 20 million. Okay, so this is the criteria for the main market. You can also come under the market capitalization test. This is typically for companies that have not met the 20 million and 6 million test, but they may have certain license or certain project, certain trademark, for example, or patent that can command at least 500 million value at the point of listing. So these companies can actually come to list under market capitalization test. And then lastly, infrastructure project. Okay, so far not many companies that have listed under this, because this is typically for companies like, for example, Shabas, Plus, highway, those with concession, because to come under this criteria of listing, you must have a project of at least 5 million running lah. I'm so sorry. At least 15 years project period. So that's why typically only concession companies that come on board under this particular test, and the project must be worth at least 500 million. Okay, and also there are other financial tests that must be fulfilled by these companies to come on board. For example, positive cash flow from operating activities and no accumulated losses under the profit test. Okay, for ACE and the main market, there is no minimum operating track record or profit deployment. But I wish to clarify, you may have noticed that most of the companies come on board under the ACE market are profitable, even though there is no requirement to have profit. In Bursa, the rule is as such that you don't have to make profit, but because of the cost of listing, I clarify the cost of listing on the lead market is about 900,000. For the ACE market, it's about 3 million. Whereas for the main market, the average is about 4 million and above, depending on the size of the company. Because when you distribute more shares to the public, then the cost will be higher. Because distributing shares does involve some kind of cost brokerage, for example. So for the ACE market, because of this cost of listing, some small companies that can't go because of the cost factor may be able to list on the lead market instead. So what I'm trying to say is that even though there is no minimum requirement for profit, but some companies may not want to choose to list on ACE and go for lead instead because of this cost involved. Later on, I will talk a bit more about incentives that we have in helping companies to list on the on the ACE and the D market. Okay, now these are other tests that we conduct. Public interest, basically your business activities cannot be illegal or have any that may have an impact to sensitivity of the public. Gambling, for example, may not be something that we encourage. Conflict of interest, this is to ensure that, you know, if you are the owner of the company and the company is involved in manufacturing of, say, shoes, and at the same time you also have another company also manufacture shoes but outside the group that's going for listing, so there is a conflict there. This is something that the owner of the company need to resolve before they go for listing, because we don't want the owner of the company after listing and then they have been given this huge award or huge contract, and they are conflicted whether to put in the company that has gone for listing or in a private company which is outside the group. So we don't want the owner of the company to be conflicted in that manner. So as such, prior to listing, this issue must be resolved. And then the second one, conflict with advisors. For example, you have taken a loan from a bank, and this bank is also helping you to go for listing, and part of the proceeds from IPO actually to settle the loan that was given by the bank. So actually the bank is actually conflicted, not so independent in advising you to go for listing. So these are some of the factors that need to be considered before you come on board. Okay, lastly, corporate governance, which we will do a check on the owner, the company, subsidiaries, all the group companies actually, and key management as well, to see whether there's any past conduct that may impair the ability of the company to go for listing. So this one we will do for all the three markets, main, ACE and LIP. Okay, this is some of the process of going for listing. I will not go into too much detail. For the main and ACE market, it's pretty straightforward. The advisors make a submission to SC and Bursa. Then the authorities will conduct review, issue queries to your advisors. They are all through your advisors, and they do site visit of the company. And then once they have gotten the approval, issue a prospectus, go for listing. But for the lead market, terbalik, is the other way around. Instead of for the main and ACE, issue prospectus at the end of the day after the approval. But for lead, terbalik, you issue the IM first, the information memorandum. So you issue the information memorandum first, then only make a submission to Bursa on suitability to list. Then once it's approved, then you can list it with. That means not like the main market and ACE market where you have to wait a bit to issue the prospectus, then go through the balloting and all that to go for listing. For lead is very fast. You can see the approval period there is 3 weeks. Okay, again, I will not go too much detail in this. Basically, these are the typical listing process. The company, pre-submission, the 3-4 months is just typical scenario for a company that's, for example, doesn't have a lot of assets. Software company, for example, doesn't have a lot of assets. It's just computers. It's just you know, the main assets actually the human, the personnel, the staff force. So in those situations, most probably the pre-submission process is much shorter because they don't really have to do evaluation of properties of their office. You know, it is a very simple due diligence. Then it could be shorter than 3 to 4 months. Then the process is about 3 months, but recently Securities Commission has announced the revamp of the IPO process, which is not effective yet. That's why I'm still using the current framework. Whereas going forward, these 3 months could be shorter because it will be left to the advisor how fast the advisor reply on the queries raised by the SC. Then you can get your approval faster. So that is actually good for the market. We are trying to make it more efficient for the appeal process. So post approval, like I mentioned, main and ACE market, they have to issue prospectus 2 to 3 months to update the document, and they can go for listing. Okay. Now for the lead market, okay, it is simpler. It's much simpler. Process for approval is 3 weeks, and then after you gotten approval, straight away you can list. Unlike the main and ACE market, where you're required to issue a prospectus.
Right. So this just now we hear about Bursa, right? This one is more to a mature company lah, not for startup company. And then you can see also the time also is needed longer. All right. So let me summarize. This is a summary of all the presentation or the channels. Okay. This is not all the channels. There are some other channels in the market that you can find, but these are the most the commonly used channel to raise fund. Right. So when you see the type of funding, okay, the first one, they are in there is a combination, or some of them are using debt, or some of them are using equity. Right. And for Magic and Penjana, of course, they're giving grant, right? It's a bit different. And funding amount, if you see, some of them got no limit, but for ECF, usually they have a limit, all right, on how much they can fund. And looking at past or future, okay, this is something very interesting, right? Let's say some of the companies that normally, especially those with the debt one, right, they will see the past, they will see your track record. How are you performing? Are you a good paymaster or not? How much asset do you have? How long have you been running your business? Okay, so this is normally on the debt. But for those channels that use equity, right, normally they want to see future, because they want to earn on the growth of the company. They want to bet on the growth of the company. So normally they will see the future, right? And the duration, of course, you have to see there is some banks you can go 1 to 3 months, and P2P is faster and stuff like that. And collateral, not all the platforms need collateral. Okay, and funding durations, how long? This is the tenure. Some of them are banks can go up to 10 years, and P2P is 3 to 6 months. Even you can go for short-term loan, and for ECF 1 to 5 years, and so on. And the cost of fund, okay, this is also something that you have to look at, right? So because normally when you're getting the funds, right, or you want to raise funds, normally you have to see the cost of fund. How much is it cost for you to get this kind of financing? All right, so this is also something very interesting. Like just now, Bursa, they're talking about hundreds of thousands and all. So also have to be calculated before you raise the fund. And then minimum years of incorporation. How long have your business been running is also something very important. Right? For example, for banks, they need you to run at least 2 to 3 years. Okay, but then my company is only 1 year old. You can go opt for P2P or ECF. Right? And let's say your company just started running, or is still in idea stage and whatnot, you can go to Magic. Okay, this is some of this idea, and please don't quote us. This is some of this rough guideline only, because different banks have different criteria, right? Different P2P platforms have their own different criteria. Even the listing market also, they have different platforms have a different criteria as well. So this is just an overview. Don't quote us, all right? So this is just an overview that we have prepared for you guys. All right, and then okay, so just now we talked about a lot of this funding, right, to receive financing for our company, for us to continuously grow. But then, right, there are also protection. Okay, it's also very, very important. All right, and there is some ways for us also to mitigate the risk. All right, so what are the common SME risks that SME owners can transfer out efficiently? All right, this is one of the interesting topic as well. So this is a very short video, no worries, only 8 minutes. So we have this Mr. Hobbit, all right, the Chief Sales Officer from Alliance General Insurance. All right, so let's look at this particular video.
What is the most important insurance for an SME in the moment is of course a wide question. So I'm trying to be very precise and very clear. To me, the most important insurance for any shop, any SME, any company in the moment is something which helps you to continue your business. Because the lockdown actually for 2 months gave a big dip already in the turnover. But even after the lockdown, if you look into shopping centers, you have less customers. So if now anything additional comes to you as an SME or a shop that you have to close, probably you won't be able to take it anymore. So you would need an insurance which helps you to sustain another period of closure of your shop, if that happens. So, and with this, of course, all insurances which were developed the last 10 years are not really addressing the issue which we have today, which is pandemic, which is COVID, which is Corona. And here you have a very new risk, which is very, very real. If you just think about now in every shop customer go in, you have to scan your personal particulars in the app. You have to take your temperature. You can imagine what happens if one of your customers was infected with COVID. The Ministry of Health will come 1 week maybe later to your shop and say, you had a customer last week who is now infected. You will have to close down your shop. You will have to disinfect your shop. You will have to test all your employees against COVID before you can open again. And this might need at least a week to do so, and it costs a lot of money. Just to give you an example, if you have a square feet of 10,000 for a shop, it will cost you about 15,000 ringgit to do a disinfection, which is good enough for the Ministry of Health to allow you to open again. So this particular part is a new risk which you need to be aware of. And for some shops, it might be too much. If you have to carve out another 15 to 20,000 ringgit, you might not be able to survive already. So this is something which you will find in the new Allianz. Now I have to make a little bit of advertisement for our product. New product which is called a Smart Retail Shield, where we include this particular cover. We call it Inconvenience Relief Benefit, and it covers the shop if exactly that happens.
So, all right. So, just a little bit about that company. So, basically, nowadays, insurance also, just to summarize, some of the insurance also have this special premium or special package for us to protect ourselves in case we also have affected by this COVID-19 as well. All right. So, before I end, right, I have a special video. All right. To play for you, a very short special video. But before I play this video, I need to ask this question: what kind of entrepreneur you are? All right, or am I? All right. So when we are entrepreneur, usually, right, how should we project ourselves when we go and raise funds, or when we go and look for the person who are going to give us the fund? Okay, which is very, very interesting. All right. So normally, if let's say my company is doing very well, and then I go and see the ECF platform, for example, how should we project ourselves? When I go and look for VC, how should we project ourselves? This is something very, very interesting. We should bring ourselves to be someone is above the documentation. Okay, I think by watching this video, you will understand how important is it to bring yourself to have a right positive mindset, to have the burning desire for you to grow the business. I think let's watch the video to understand what I'm trying to say. So let's watch the video.
One of the investments you made is considered by many people to be the most successful investment in the history of mankind. You invested roughly $20 million in Alibaba, and at the time it went public, it was worth roughly $90 billion. So 20 million to 90 billion is a return of about 4,500%. Now, Jack Ma is a very distinguished individual now one of the most successful entrepreneurs in the world. What is it that made you feel this was worth putting in $20 million?
Well, he had no business plan and zero revenue. Employees, maybe 35, 40 employees. But his eyes was very strong eyes, strong, shining eyes. I could tell from the way he talked, the way he looked at, he has a charisma, he has a leadership. So his business model was wrong. It's the way he talked, the way he can bring young Chinese people following him.
Before Yahoo was so famous, you made an early investment in it, which was spectacularly successful. How did you hear of Yahoo?
Yeah, Yahoo US was still private, 15 employees, and I convinced Jerry Yan to take $100 million of our investment. So at the time we negotiated, we agreed they grew from 15 to 35 people, 35 people. And we invest $100 million to own 35%, and actually went IPO and made a great return. And at the same time, I convinced him to start joint venture, board of Yahoo Japan, where we put $1.2 million, they put $0.8 million, $2 million startup capital. We own 60%.
Now, let's talk about one big mistake you made overall. Obviously, you're very successful in almost everything you've touched, but you were making a lot of internet investments around the turn of the century, around year 2000, 1999, 2001. The market went down in the tech crash, and it is said that you personally lost $70 billion of net worth, the greatest loss that any human being has ever suffered financially. So how did you feel losing $70 billion of net worth?
1 year before that, actually, my net worth, personal net worth, was increasing $10 billion per week. For 3 days, I became richer than Bill Gates.
Wow. Did that upset him, or?
No, before I told to anybody else, you know, our stock started crashing.
Okay.
So in 6 months after that, our share price went down 99%. So we almost went bankrupt. And somehow I survived.
Right. So you see, this what does this video trying to say, right? Even though you see he was talking about this Jack Ma even don't have a business plan, but then right, he see the burning desire. He see that he was a visionary. He sees that Jack Ma really have a vision to grow a huge company. So this is what we also need as entrepreneurs. Okay, it's very important for us to bring ourselves and really project our dream and tell to the VC or the person that we want to raise funds to show them, to give the confidence to say that we can deliver this. Okay, so I think I would like to end my presentation with this. Thank you very much, and really hope to see you guys on the next events. All right, and I'll pass back to our moderator, Arthur.
Yeah, thank you, Surin, for such a long session for you. Okay, so I think maybe you have watched some of the video and find that it's very benefit to you. In fact, there are more video. Actually, you can get it from our MCM Facebook page, or maybe you can get it from our MCMX Capital Management this YouTube channel. So please subscribe all the Facebook and also the Instagram or the LinkedIn and also the YouTube in order for you to get more of the information and more of the video clip. Okay, so before we go for the 5 minutes break, Surin?
Yes, I'm here.
Okay, yeah, there is one question sent to me. Okay, so the question go like that: should I grow my business, use my business profit, or look for funding to grow my business?
All right. Okay, I think I understand the question. So I think this person is making profit, right? So maybe the business is really already making profit.
Yes.
And thinking, should I use my profit to continue to expand, or I go and raise funds? Okay, this is a very subjective question, but I give you an analogy, a simple analogy. A lot of companies grow a lot faster when they use external funding. All right, because our profit is limited. All right, maybe our business are making 1 million, but if people see your potential for you to grow, they are willing to give 10 million, 20 million. All right, so when your company have the potential to grow and your funding comes in and you can grow a lot faster. Okay, it's about how fast do you want to build your business also. So it's for you to, and then another thing is you also have to think, if let's say I want to get outside funding, I might have to give a portion of my company away by giving equity. Also, some of the people also, they want to keep the equity for themselves and grow the company slowly. It's actually your choice, but if you want to grow faster, usually we try to get the funding externally. We try to leverage on the funding and grow faster, and also we can outperform our competitors and be the biggest player in the market. So this is for you to decide, but then it's either you want to keep the ownership of the company or you want to grow fast. Okay, so this is for you to judge, all right? So I think I understand, I answered that question.
Okay, so I think we'll go for a 5 minutes break. So we'll come back after the 5 minutes break.
Hello, welcome to MCM GIC Global Investment Community. What is MCM Global Investment Community? Let us walk you through to understand it better. Benjamin Franklin once said, "An investment in knowledge pays the best interest." As part of our CSR, Corporate Social Responsibility, we founded Global Investment Community on 15 March 2016 to give the community members the right knowledge about investing, be it whether you are about to invest now or later. It's your fingertips home where you can get hit start in your investing education. A home filled with experienced investors that share their insight where you hardly find anywhere else. Main perks inclusive gaining the time and market-proven investment strategies, property investment lifecycle (PRLC) and business investment lifecycle (BRLC). What does that mean? It means learning from the experienced community members in various industries, learning various proven investment strategies and exit plans, learning what is risk management and recovery strategies, learning why diversification in different industries and markets are so important, access to global projects and businesses. On top of it, a great team to support you all the way along. Here are the 3 main moves how MCM GIC can help you. Education seminars and workshops. As what the late Kofi Annan said, knowledge is power. Seminars are one of the best ways to get proper insights from experts. In the investing world, seminars provide you access to these experts so you can get a shortcut on what to learn and what to be aware of. MCM GIC holds almost 150 seminars globally every year, exclusive to its GIC members. From the inside out and makes wise decisions. Projects management. Since 2012, MCM is in projects covers in the community. With clarity, members can easily view their projects from a transparent perspective, which is reassuring. This includes existing sharing ecosystem to help GIC members with their investing journey as they learn. GIC has a sharing economy to maximize usage of resources. MCM realized their this is where ecosystem comes in. Partners get connected resources. Members get maximum value being the small. It is a community of our people. And what they're really looking for. You may also learn inside experience from the inbound part of if you to stash inside. One lesson learned with this. Network is your network.
Okay, so we have to the third bit, that's the final topic for our today's Business 101. So this is the important topic to get to know more between MCM and GIC. Okay, so today we have invited our MCM Baru KK branch partner to share with us on this specific topic. Okay, please welcome our speaker, Sylvester Chi. So Sylvester,
okay, thank you to our moderator, Arthur, for your introduction. First of all, I'd like to take this opportunity to thank MCM and our CEO Max for giving this chance to share this topic. So I'm sure everybody enjoying this event since 2. Now it's almost coming to 4:30. So I'm going to share to you. Like speaker just now have shared, like Mr. Roy, taking us to know more better why we should change the business model, especially during this pandemic. And Mr. Suren just now telling us a lot of channels of the funding, equity funding, and that will help our business to continue to grow. So today my duty is going to introduce to you about this MCM and GIC, where we can work well together for the betterness. So next, please. So who are we in MCM? To simplify, let's just watch this short MCM. This is our founder, Professor Justus Max Sanka. This is during the award of this Midas in 2015. I know Max personally for I think more than 18 years. So with him, I'm in this platform for more than 2.5 years, and I have no regret of knowing him. So next, please. So this is our milestone for this GIC established in 2012. We have completed more than 30 projects in more than 10 countries. Project under management is more than 10 billion USD, and then we have more than 5,000 satisfied investors and receiving multi-award. Next, please. Okay, MCM, we come with the mission, the value, and we have our vision to become the reliable global project management consultants, PMC, and to turn now everyone can invest globally into reality and maximize the efficiency and effectiveness, and continues to improve, and of course the maturity, preserving the trust and integrity. Next, please. So this is some of the awards and recognition that MCM received from Midas in 2015, and of course you can see from here the what I call the Global Compact Support and the Asia Golden Dragon Award, and so many. Next, please. Okay, MCM is founded by a global investor himself, which means we invest ourselves before we introduce to others, and with a solid track record, we have a lot of satisfied, and it is recognized by a lot of these industry players, and this is our MCM's unique strength. Next, please. So I would like to introduce to you, we have this GIC, we call that a global and we will click on this video.
What is global investment community? Income stepping together to bridge the gap by financial opportunities. It's about giving the right knowledge about investing, whether you're about to invest now or later. This is MCM Global Investment Community. It's where you can get a head start in your investing education. It's about gaining the time and market-proven investment strategies. Property Investment Life Cycle, PILC, and Business Investment Life Cycle, BILC. What does that mean? It means learning. Learning from the knowledge sharing. learning from the experienced community members, learning from the various proven strategies, learning from the industry's diversification. Since its foundation, MCMJIT connects over 5,000 JIT members in 30 cities across Asia Pacific, European and Oceania countries to maximize the utilization of resources in the sharing ecosystem. Partners get connected with reliable resources. JIT members get maximum value being in the ecosystem. Thriving more than 400 global investment seminar, GIS, reserved exclusively for the JIT members. As what the late Kofi Annan said, knowledge is power. Seminars are one of the best ways to get proper insights from experts. In the investing world, seminars provide you access to these experts, so you can get a shortcut on what to learn and what to be aware of. And we will guide you all the way long. Let us help you more. Be part of our global investment community.
Okay, this is our GIC, Global Investment Community. In 2012, the MCM is founded, and in 2015, we received the Excellent Investments Trust. And in 2015, we also received the Youth Nation Building Award together as the same years, the Midas Touch Asia Enterprise Platinum. And GIC formations 2016, and then we exceed the members of 1,000 GICs. And another one is on this MCM Small Tail Officials opening in Christchurch, New Zealand in 2017, and receiving the SDG Council's these members award in 2017. During 2018, we already exceed 2,500 members. And by 2018, we already hit a project under management more than 10 billion. And last year, we already able to recruit more than 5,000 members. Next, please. So this is the global media that is being published globally. You can see from this, I think more than 60 media on this GIC launching. Next. So GIC launched in 15th of March 2016. I personally joined GIC Club, GIC community in 2018 March until today is 2.5 years. And then I really learned a great deal from this community and to become a very confident and satisfied investor with MCM. So MCM not just literally a PMC consultants, but we have our board of convener. Like the first one, this is Tan Sri Yahya Ibrahim. He's an education icon for Malaysia. I personally met him. And we have many other board of convener. We have a legal advisor, the finance, even we have the property expert, business development expert, and so on. That is in our board of convener. Next. Even we have this economists, this international trade from India. We have even have this movie director or art and culture that is also sit in our board of convener, where MCM with collaboration with all of them that provide good advisors and what they call professionals guidance, how we can make better for whatever project that is coming in. Next. So MCM, like what I have mentioned earlier, our vision is become your reliable global investment education platform. So maybe some of you that you are not sure or what is this all about, it's good that you just come in and get to know. We are going to give you a lot of information, and of course we're going to guide you through our educational platform. And our mission is like Asia, everybody can fly, but here we're talking about now everyone can invest globally. So MCM, we have a lot of very great growth portfolio that we handle through this PMC project. And through this one, we relate to all our this GIC community with the reason, because through this community, we can handle a lot of issues like outside there. I'm sure most of you know and heard of many unregulated scheme, investment scheme that this become a scam. Too many agents that only pay for the commissions. And then when something happens, they don't know where to refer. But through our this community, GIC MCM, this will be taken care of. And then we what do you call we are built on the value of trust and integrity. And of course, our this strategy is asset today. Next. This is a strategy that I mentioned just now, property investment life cycle. So whereby each cycle in the properties, that is also an opportunity. Through our PMC, MCM, we after done the due diligence, and then we bring in the project to our GIC member, and then of course we've done a lot of so just now what I mentioned is the PILC. What you can see from here is started from redevelopment project like in New Zealand, land acquisition in Hong Kong, construction development management, renovation, even refurbishment project in Germany. This is the PILC project, ongoing and completed project with MCM. Next. So you can see from here, we have this ongoing project in Subang too. This one is Health Ministry official student accommodation. We have this Bond Square project. And then we have a completed project in New Zealand, Christchurch, is the MCM motel. And of course, this, what they call the Bido project, ongoing project. Next. So the BILC is a business investment life cycle. Same also in the business, we have all cycle, and each cycle we have also have the opportunity. So you can see from here, like the earlier speaker have shared, companies from startup company like what we handled before this MCM Sally Salad, MCM Motel, and so on. We even have this projector farm, MCM Residence, until the growth stage, the expansion stage, and then the major step. So again, like all this business cycle, there is also an opportunity, but through MCM, we bring about this to all our investors to participate. Next. So this is like being elaborated by our Mr. Suren just now. This is the startup, the cycles of a startup company from the start off where the angels and family members and friends come and they put in money to initiate the growth until the early stage, until the growth stage where the venture capitalists coming in until the IPO. So for us in MCM is this is the what they call the information that we needed before we bring in any potential company to be invested in. Next. So BILC project that is ongoing and already completed come from here. The first one you can see we involved in this fashion, that is Ruwear. Ruwear, there's another fashions GBP, and EH is involved in travel, and we have this e-com business called Jocom, and we have this IT they call IT companies, SEC, AI, Wiltech. Even we have this Educate Kingsgate International School. Fintech company, we have a lot, even wellness Danai Spa, and then last recently being listed in Singapore One Exchange, and healthcare we have HEB, and recently we just have our this physical Maxwell Pharmacies is just been launched. This part and parcel of our BILC project. Next. So this is a visiting study tour to all our principal. We bring in all our investors to visit in KL and many of their HQ office to get to know and get closer to know the companies, their activities, their business growth and expansion. Next. So the BIC success study Danai Wellness video I'm going to share to you. And before I play this one, just to inform everybody is even today we have a meeting. We're talking about this Danai Spa being listed in One Exchange, and it's a great experience that we learn now how to do the trading, this and that. And I was told for those already invested in one, there's a lot of great news, and we are planning for the what they call the next listing will be in Australia Stock Exchange. So spend a few minutes for this Danai Spa wellness video.
Good morning, everyone. I'm Hai Ping, CEO of One Exchange. And I would like to thank all of you for taking time to join us virtually on this momentous event. We would like to offer our heartiest congratulations to Cregan Resources, our very first cross-border direct listing, as well as the second company to join the 1X Private Securities Board.
So at the back of this, we successfully listed on one exchange. So 1X is the first private securities exchange in the leading global financial hub of Singapore.
Now it's a moment everyone is waiting for. I would now like to invite everyone to join me in the countdown for the official listing of Cregan Resources on one exchange.
2, 1. Until Danai changed the face of the industry entirely with its innovative approach.
Okay, that's our Danai Spa, Danai Wellness listed successfully in 1X. So for all the SME, the business owner, get ready your business before looking for investor, like your company profile, business plan, financial report that being mentioned again by all the speakers. So next. So there's not in fact it's not three-way. There's many ways of credit funding, like debt funding, equity funding, hybrid, like being mentioned by our student just now. So it'll be interesting if you want to know in depth and can refer at us at a later stage. Next, please. So understanding the MCM integrated resources sharing ecosystem, I think is important for us. Like what you can see here, MCMs, we have the marketing team, our partner, and through our MCM Ecom, we have this big portal. Through this portal, we have this GitHub, ABC, and many other entities. And also in our ecosystem, we manage a lot of this project. And then we have Cloud Plus Asia as an ECF platform. And through this education platform, GIC, we have our member here. Through the Money Compass, we do the e-learning, okay, you learn money. And of course, at the same time, we also lies with our partner, the Cometro, our corporation. So this is our MCM's ecosystem. So next. So I hope my short brief sharing introduction of MCM and GIC will give all of you some idea what our committee is all about. So our encouragement here is for all of you here outside there, get to know this in depth, and then after that, of course, we will give you a lot of solutions for all the business owner outside. And I hope everybody continue to what we call stay healthy, at the same time make our business run well. Okay, that's from me. I pass back to our moderator, Arthur. Thank you.
Arthur, your microphone. Arthur, your microphone.
Okay, can you hear me?
Yep, okay now.
Yeah, all right. Sorry, yeah, very sorry. Okay, so after listening to this Sylvester, we know that besides being a global investment platform, important company where we provide necessary advisory in terms of business startup, business growing, expansion, and also even to the